And in our top business story, Dubai property prices fell in April as a property index in the Emirate turned negative for the first time in 4 years. The residential prices index started declining from the second quarter of last year, in line with the fall in oil and gold prices, according to Radin, a property information company. The index dropped about 3% in April from the same period last year, with apartment sales prices dipping 0.8% in April from March and declining 3.6% from a year ago. Villa sales prices fell 1.8% month-on-month, but edged up 0.4% year-on-year. Although apartment rents fell 0.6% month-on-month, villa rents dropped just 0.2% month-on-month. After property sale prices surged in 2013 and last year, Dubai's residential market is cooling after the introduction of the federal mortgage cap and the doubling of property registration fees. The additional of 2,000 new apartments and villas in the first quarter of this year was also a contributing factor to the decline. And although rental demand remains healthy, there is growing choice because new developments which are being released across the Emirate. In Abu Dhabi, apartment prices fell 1% in April from March, while villa prices dropped 1.2%. Underpinned by huge cash reserves, GCC countries will continue to spend on an estimated $172 billion worth of infrastructure and capital projects planned and underway in 2015, the highest on record to date. According to Deloitte Middle East's newly released annual report entitled GCC Powers of Construction 2015, the GCC countries have the benefit of huge reserves built up which they can continue to use to achieve their outlined strategies for economic diversification. Out of the $2.8 trillion projects which are in execution and pre-execution phases across the GCC, it is forecast that $172 billion will be spent on projects this year. The Deloitte report is based on data gathered from surveys and supported by interviews with some of the most prominent construction industry leaders from the region. The UAE's Al Maktoum International Airport expansion, budgeted at $32 billion and billed as the biggest airport in the world, is the first among the GCC projects by cost. High-profile CEOs, senior government officials and business entrepreneurs from the region have gathered to discuss more investment opportunities in Sharjah and possible projects available in the UAE. At a CEO Club Business Roundtable meeting held in Sharjah Chamber of Commerce and Industry, the CEO of Sharjah Investment and Development Authority Shuruk, His Excellency Marwan bin Jassim Al Sarkal, said that Sharjah has already distinguished itself as an attractive business destination, and the Emirate has the most diversifying economy in the GCC, with almost every sector making up more than 20% of its GDP. During the roundtable, top CEOs representing Sharjah said that although investment opportunities are growing rapidly, avenues for investment need to be well planned, as the Emirate is facing a new set of challenges with increasing demand for infrastructure and community services.
Sharuk has been seen as the driving force for Sharjah's transformation. We've tried to attract investments in the tourism sector. We believe that the tourism sector has a lot to offer. The Sharjah Tourism and Development Authority have actually created a vision that wants to attract more than 10 million visitors by 2020. That gives us a lot of stress to actually attract more investors to invest in the tourism sector. However, the sectors that we are visioning that to attract more investors are also healthcare. So it's a message to all investors that are into the healthcare industry that would like to open hospitals, medical centers. Sharjah is there. Sharjah has a market, and Sharjah is a place where you can actually create a great business opportunity.
So we're bringing our CEOs and investors into Sharjah today, and so they can learn more about Sharjah business opportunities. So today we have different heads of different departments from Sharjah authorities. So we would be discussing in a panel discussion the opportunities that currently available for the investors, not only the local investor, international investors from all walk of life and all countries, and plus we will be discussing what more that in the future the Sharjah is offering to the investors.
Claiming that Sharjah is the investment hub of the UAE, the CEOs said Sharjah's industrial sector consumes more than 45% of the total investment of the country, with total sales in various sectors contributing 45 billion dirhams to UAE's economy. Talking about the opportunities that Sharjah's free zone provides, the CEOs said that more than 7,500 companies now operate in the Emirate with 100% ownership, a major draw for investment. Highlighting that the healthcare sector is a great opportunity for investment, the Director of Sharjah Health Authority, Dr. Abdulaziz Al-Muhairi, revealed that by the end of 2016, the healthcare sector of the Emirate will grow by 9.3%, with demands for hospital beds reaching 25,000 by the year 2025.
Shuruq is actually mandated to develop also some projects in the Emirate of Sharjah. Currently, our focus, or for the past 3 years, our focus was on developing tourism projects. We have developed Al-Majaz waterfront, we have developed Al-Qasba, Al-Muntaza Park, and we have a couple of tourism-related projects in the pipeline. You will hear about them soon, inshallah.
Emaar Misr, the Egyptian unit of Dubai's Emaar Properties, has reportedly scaled back the price of its listing of 600 million shares in the Egyptian bourse to $353 million from a previous $367 million. The Emaar listing is expected to be the largest flotation on the Cairo exchange since 2007, with the Egyptian subsidiary having a portfolio of investments in Egypt worth around 53 billion Egyptian pounds. The announcement, which was reported in Egyptian newspapers today, stated that the shares will be priced at a maximum of £4.49 each, meaning the offer is expected to raise £2.69 billion. The company had previously aimed to price the shares at £4.70.